So let's welcome him.
Yeah. Let's welcome Gary Lindner
Gary,
to the stage.
good to have you with us.
How you doing today?
Thank you, Gary.
Well, good afternoon, everybody. Hey, before I start, I have to give a shout out to one of my heroine, Lori Lowe. Lori's one of the greatest people that I've ever met, and she's courageous, and she's a philanthropist. She's a business lady, but she knows how to give back, and I have nothing but the ultimate respect and regard for her. So thanks so much for being. Okay, what I'm going to talk. First of all, how many people out here are business owners? Okay. Gee, that's great. How many of you have never had any problem getting capital? Oh, really? Good. And how many have challenges with capital? Yeah. Okay. So what we're going to talk about today is different sources of funds, and there's abundant numbers. So I've been in this kind of business for about 10 years, made about 6,000 loans, and what I've done is I've always experimented with different platforms and where do you get capital and various sources. Some are very good and some are not so good. So what we're going to do is talk about capital sources. Our experience, and this is about, there are a lot of studies. Okay, I guess okay. Where's okay? All right, anyway. Let's try it that way. We'll try the arrow then. Okay. So first of all, there are a lot of studies. If you study all the small businesses and talk to them, about 60% say their single biggest challenge is getting capital to either start their business or grow it or take it to the next level. And that's pretty common amongst all small business owners across the country. What I'm talking about today is, in a few minutes, is available sources of capital and where you can find it. And we're not talking about venture capital, we're not talking about investors, we're talking about you as individual businesses trying to access capital to get your business either kickstarted or getting going. And then a lot of times people go out after money, but there's some questions that you really need to ask before you commit yourself to some capital. So that's what we're going to talk about today. And then what we've discovered through a lot of work with a lot of small businesses, it's not all about capital, it's about knowing what to do with it once you get it. And our discovery is that many small businesses have an extraordinarily difficult time managing their finances, whether it be a balance sheet, cash flow, or profit and loss statement. And I always say, if you don't understand your financials of your business and you're successful, you're very lucky. So the smart folks have really gotten into the what I would call into the financial aspect of running a business. And then we've also found that everybody needs, not everybody needs a mentor, but everybody can benefit from a mentor to benchmark from. One thing about Texas, it is small business is big business in Texas. So there's 2.2 million small businesses in the state of Texas with 5 or fewer employees. And that represents almost 90% of all businesses in our state. And for example, Travis County has 123,000 small businesses with 5 or fewer employees. A lot are home-based businesses, some are storefronts, but nevertheless, most businesses do not have a lot of employees. And the interesting thing is the impact of the small businesses on the economy. If just 1 in every 3 of those businesses hired a single individual, the United States would be at full employment. So that's the power of the collective of small businesses. So we're going to talk about sources of capital. How many of you have bank loans or try to get a bank loan and were turned down for one reason or the other? Okay. What banks, Secretary of Treasury Lou said 8,000 small business owners are turned down by banks every day for a small business loan. And I would say you can blame the banks, but the banks are very heavily regulated and they have very rigid criteria as far as getting a bank loan. You have to pass all of their C's. And I said 5 C's, heck, there's 6 or 7, but cash flow, collateral, credit, commitment, and there's a whole host of others that really, you have to pass all of those to get a bank loan. How many of you bootstrapped your business? And that's the majority, and that's pretty typical, and most folks do it through bootstrapping, and everybody talks about families and friends, but occasionally there's a fool that might see some merit in your business. So the important thing is, and that's, as I said, I would say 70% of all small business owners, that's how they start up and make a pretty significant commitment in time and their own capital. The credit cards, a lot of folks have business credit cards. And yeah, and if you use it responsibly, it's a great tool. But our experience is a lot of folks have a credit card, and then they start making the minimum payments. And trust me, that'll come up to about 29 to 30% APR, or annual percentage rate on credit card. So it can be a very great opportunity for you, but at the same time, it can be also a great burden. So we see a lot of folks that we bring in, and we refinance their credit cards or pay off their credit cards and refinance them at a lot lower interest rate. Payday loans, they're almost criminal. And the reason, payday loans say there's usury laws, there's all this and all that, but payday lenders say it's not a loan, it's a cash advance. And they use that as a distinction to escape, if you would, some of the regulatory items in place. State of Texas, for example, a lot of the legislators actually have investments in payday lenders, so you're not going to see very strong legislation come to our state or any other states for that same reason. There's a lot of opportunities on websites, and the only thing I tell you about these, I try them. I use them as I lend money to it and I borrow money from it, and just to see how it works. Not large amounts, but just to see how the mechanics of this comes together. But for example, I call it person-to-person or person-to-business Prosper. And Prosper's been around for quite a while, and and their loans go from $2,000 to $35,000. And they lend over $500 million in those increments. And basically, it's like Kiva or eBay. You put your business on up for bid, and then people make commitments, financial commitments to funding your business. And if you have a strong business, what will happen is the interest rate keeps coming down. As people compete, they'll offer you a better interest rate than is out there before. So you usually have 2 weeks to get funded, or you go home. The business to business is IBankcom, and I've been a subscriber as a business, as a lender to IBank. And a lot of businesses go online, they fill out an application, they have some basic information about their business, and then and many of the large banks actually subscribe to IBank and look for prospective customers. And so I pay a certain amount of money every month to purchase leads for Texas that meet certain criteria. And it's a great way for some businesses have really financed themselves quite well through that source. What I've also seen, this is a relatively new phenomenon, is I call it the .com companies. And I'm just listed a couple of them. On Deck lends short-term, and it's large amounts of money. When I say large, I'm talking hundreds of thousands of dollars, but typically it's short-term, 12 to 18 months. And the way On Deck works is their criteria is really interesting. You have to have a year and a half in business, you have to have $100,000 in revenue, and your credit score has to be above 500, which is not really, so credit score is really not a criteria. It's your time in business and your annual revenue. So if you have that, you can get a loan from On Deck. The kicker is they take money out of your account every single day. They just ACH take the money out of your account on a daily basis to pay back that loan. So you have to be in a position to be able to handle that kind of the demand on your finances. So a lot of people that need a large amount quickly, maybe to open another store, or and able to pay it off quickly, is really a great idea. Cabbage is really slick. I mean, they're one of the better marketing. And it's interesting why they use, I don't know why they use cabbage with a K, but nevertheless, they go up to $100,000 short term, And then last year, they lent $1 billion through that site. Lending Club and Cabbage and On Deck will not disclose an interest rate. They will just tell you, here's what you owe, and there's no APR. But I can tell you right now, it's going to be somewhere between 35 and 50% if you calculated it out with the payments. The Lending Club is interesting. So what I do is I put my personal money into Lending Club, and I say, here's my risk tolerance. And Lending Club automatically matches me with people who've gone in to ask for capital. So last year, for example, I have a pretty high risk tolerance. So my return last year was 12% on the investment in Lending Club. And the people who get loans from Lending Club they have high ratings for Lending Club because it's really, it's me putting money in, somebody else borrowing it, and it's a great, I think it's the best website around, or it's got the best customer ratings of any of the others. Everybody's heard about crowdfunding, and the first example of crowdfunding that I'm aware of was in the 1800s when we received the Statue of Liberty. And it came to us in a ship, but there was no base for it. So this fellow named John Pulitzer, who you may have heard of at one time or the others, went to the citizens in New York and said, hey, we need $100,000 to put a base under the Statue of Liberty. And he raised that $100,000 in less than 30 days, and the average donation was 85 cents. So it's just the power, once again, of crowd funding. And you see it a lot for disaster relief, political campaigns, so it's not anything particularly new. And the big Kickstarter, everybody's heard of Kickstarter, and there's some great success stories, but at the same time, on all of the crowdfunding sites, what you really need to have is a following. In other words, you can go online and say, I'm going to start a crowdfunding campaign, but you need to have a product and a following, otherwise you're going to fizzle really fast. And if you go on a crowdfunding site and don't raise any money, maybe your business is a little bit suspect in terms of its appeal to the public. Kickstarter, Indiegogo, GoFundMe, and there's, as I said, there's actually 530 crowdfunding platforms that came out between 2010 and 2012. And what's interesting is the Small Business Jobs Act actually provided more latitude in what I call crowd lending. So right now in Texas, there's about 8 sites that have been approved with the Texas Security Commission. And what you can do is have a campaign, and then you as an individual can actually donate into a crowd lending activity. So it's a pretty interesting way of doing business. There hasn't been a lot of traction in that respect, but nevertheless, it's available. I want to talk a little, briefly about SBA loans. And the SBA does not make loans. They make capital available, but they do not make loans. So all the loans from SBA are made through intermediaries. And the CDFIs, the Community Development Financial Institution, which is what we are, and we also make some 7A loans. But typically, the loans that are SBA are through a bank. And the nice thing about an SBA loan, for example, a 7A, is there's a government guarantee. So as a lender, you feel some security if you make a government guarantee loan. So about a third of our portfolio are these community advantage loans, and they're great for startups and those that have a shortfall in collateral. And the others are obviously for larger, commercial projects. And just if you're going out for capital, there's a few things you need to really ask the question because you have rights as well, and don't commit something and all of a sudden you find out, hey, wait a minute, I didn't know that this was part of the deal. So, interest rates, fixed or variable. If you have a variable interest rate, your payments can go up considerably. It must be on a timer. You have to have insurance as a condition of the loan, and is there a monthly service fee? These are questions you should ask. And if you're with a bank and say, hey, if I have a business account with you, will you give me a discount on my loan? And then a lot of loans, it looks great, but there's a closing fee that might be collected at closing that's pretty significant. And when you're lenders, do they provide any kind of support for you after they make the loan? And finally, probably the most interesting is there a penalty for early repayment? And for most of the .coms, there is, okay? Okay, but I'm going to talk just briefly about community development financial institutions. And these are Treasury designated organizations, and the whole purpose of them existing is to help underserved small businesses. And so, for example, we're a CDFI, and I'll talk one more slide on this, but really it's underserved populations. That tends to be minorities, women, and veteran business owners, and those in low to moderate income census tracts. So that's a target audience for folks like myself. And there's a list of all these, and in Texas has very few CDFIs compared to some of the northeastern states, but they're really a good source for capital, and there's some credit unions that are also what we call community development financial institutions. And what that allows you to do is compete for federal funds, and also many of the banks that lend to us want to know if we're a CDFI, because they lend money to us, we lend to the underserved populations, and then they get credit for what we do. They get Community Reinvestment Act credit for what we do with their money. And like I said, what makes us different is, just as I mentioned, underserved population, no application fee. And you say no minimum FICO score. And so why would you do that? And we look at businesses in a different way than most. We'll look at it and say, is your low credit because of a life event or a lifestyle? Life happens to people. Bad things happen to good people. And it might be a divorce, it might be death in the family. There's a whole lot of reasons that people are challenged with credit. So when we see somebody like that, and they're trying to fix it, trying to repair it, we're going to help them. Anybody here been in the Navy? Okay, good. So the other converse of that is if somebody goes out and spends money like a drunken sailor, we're not going to help them with their business. So the whole point is, good people can have bad credit, but if they're attempting to repair it, we're going to help them with that. And we're going to help that with them with capital as well. Low equity, flexible loan terms. And in our case, we have 253 mentors around the state that are there to help our clients. So if you need help with financials or with social media or with legal or with licensing, we have mentors, and it's no cost to our clients. So it's really a great resource. And then we have a variety of loan products. So we're always looking for a loan product that really suits the need of the individual. And in some cases, we may send them somewhere else so somebody else can give them a better deal than we can. So the important thing is what's the right thing for the client, and that's what we're interested in. And these are, we have 7 offices around Texas. Our corporate office is here on the east side on MLK Drive by the light rail station. And come by and visit us. Because of our population, 92% of our loans last year went to minority, women, and veterans. And in Texas, in all of our locations, we're bilingual, and we think you have to be bilingual if you want to work in the Hispanic population, and that's a very growing population in the terms of businesses. And so we've been very fortunate in having, a real great staff. And our board is actually a minority majority board, and it reflects the people that we serve. So we have 4 African Americans, 6 Hispanics, and 3 Anglos on our board. So we think that is important. The Texas Diversity Council gave us an award for our commitment to reaching out to the underserved population. So 2 minutes, okay. So I'm going to wrap it up because my voice is giving out. So does anybody have in 2 minutes have a question that I may be able to answer? Yes, sir.
What percentage of your client base is up-and-coming small technology companies?
I'd say about 10 to 15%. It's a small percentage. And it's really interesting. Our total, if you look at our total population, total real fortune, we're really dispersed. Okay, sorry. We have a wide range of business that we lend to. We have doctors, lawyers, nail salons, food trucks, food trailers. And on the technology side, I would say it's around 10%, so it's not a significant percentage. And there's other opportunities for technology companies that may be a better option than we are. Yes, Lori?
Hello, Gary. So when we all make our millions, we can invest, though, in PeopleFund, right? You allow outside investment?
Yes.
And what kind of return do you provide
Oh, okay.
on the other side?
We get, most of our money comes from banks because they get credit from the regulators because we lend to underserved populations. But we get a large amount of our money from what we call socially responsible investors. So we have at least a half a dozen religious organizations that have approached us and said, we like what you do because you're helping the community. We see what your money is doing. And we pay a return of about 2 to 3%. So you're not going to get rich off of it, but you will get a return. And we have some of our investors, and these are family foundations, that at the end of the year, we pay their interest and they donate it back to us. So it's really free money for the year. So we're really fortunate. So we get money from the state of Texas for veterans. We have 35 different funding sources right now. And we're actually, believe it or not, I know this sounds unusual, we're actually turning away offers of capital. If our average cost of capital is 2.4%. So then we have a small spread, and our interest rates and fees are lower than any of our competitors, and we think that's really important. We'll talk. Thank you very much.